One of the difference that institutional investors have compared to individuals on the stock market is the way we analyze information and the way we manage wealth when it comes to investments. So, we usually position ourselves on stocks that are analyzed and are just good buy opportunities. And this is not really the case for the common individual. And it's actually quite simple to understand this once you get to get things going. So there's not a proper fixed framework, but essentially what you can do is to analyze the reporting revenues that have been occurring on a certain company that you're considering to invest. And you can look into the spreadsheets and understand how they're being performing for the past years. So you can consider a number of years and then you go up to see how they're performing in terms of revenue, if they're scaling or not. And you also go into how they're selling the product, how they're scaling the product in terms of expanding on the market. And when it comes to consider an investment, usually you look into the market cap and you want to compare it to the revenue. So a lot of times what may happen, and this is why I mentioned that people should be careful around IPOs. It's because when a company is just recently IPO, which means just have been introduced to the public markets recently, they tend to come overpriced already. So the entry point for you to start to buy on that moment usually is not the best. Because if you go and compare the market cap to the revenue, you're probably going to understand it's not very interesting for you to consider to start investing on that moment. So again, that's why I say that IPOs are usually traps in terms of short-term opportunities. But if you wait for things to cool down on the markets, usually you can get more interesting prices moving forward. But we're speaking about some years. Again, this is not all the time the same case. It is a measure that you should be making between the market cap and the revenue of the companies you're considering to invest. Now, a lot of people try to guess prices when it comes to selling, and this is another trap that people often go into. So, what institutional investors usually do is to correlate the information they have with macroeconomics to understand if the economy is still shooting up or if it start to be restricted in terms of the policy that is implemented. And you also go into the companies and you can in a way predict where the market cap can go relative to the revenue when it's on the peak of the bull run per se. So you do know there's a multiplier that they usually can reach out to in terms of that number. So it's not really a realistic price target that you may attain this way, but you can have a good measure around the position in which you should consider to sell. And while most people individually they tend to look upon selling, consider their entry point on the market, institutional investors also consider entry point, exit points, on a longer time frame. So we do know that usually people consider to entry on the lower basis of the price, which is on the bear market, and then they should extend further to the bull run and get a certain multiplier, and then they sell off. And while individual people are just considering their entry points and not really all this trend that may be extended from the bear market till the end of the bull run per se. Again, each stock may have its own trend, so the global trend that may be implemented on the place in which you are investing may not be applied to a certain stock you are investing. So there's particular trends when it comes to each stock. Usually stocks that are considerably bigger in terms of market caps and more popularized, they trend on a very similar way to the global market in which they are placed. But when it comes to startups, they tend to have a less correlated framework in terms of how they behave on the market. So again, I already mentioned this. I know there's a bunch of people reaching out to try to understand how they actually should invest, and I try to give the best information for people that are interested on this space. But to be honest, a lot of what I'm talking about is about you getting practice into doing this. It's a daily activity that we actually do. We analyze a bunch of companies, we see the performance of a lot of companies, we understand how things move. So we just make all this together to try to get the best results. And most people don't really have the time to do this. So this is why I say that for the common individual, you should only consider to allocate your money to investment funds. That's the better way for you to approach in terms of investments. Because statistically, you can only perform as good as an investment fund on the market if you just make yourself doing exactly the same, which is a long term career into these investments that investment funds are just making. And this is, I would say, for people that are in the place, it's a bit intuitive to be honest, but for people that are not really used to this, I would say it's very hard to understand everything. And again, I can tell you that, as you may be aware as well, if you're researching out to try to get more information in how to invest and how institutional investors actually do this, you don't have proper answers. Even trying to get insights from the biggest institutions, from the people that are in charge, you don't have a lot of information. So this is a space that is very closed out in terms of how people operate inside. And again, the way I do things is a way that I have been developing throughout my time in this. I just compile all the data and try to make the best results as possible around everything that I have. And at the same time, I gather with my team to understand how we should move all together, because usually a single person may be just overlooking something, and it's important to get pretty much everyone aligning on what's happening, because you may have different um, points of view, different perspectives. So the more information we can have in our side to just try to get the better outcome just provides a better